Hi everyone, and welcome to the latest webinar from Handset Markets, me, Richard Perry. I'm Market Analyst at Handset Markets, and this latest webinar is on the secrets of support and resistance. First of all, just very quickly show you this disclaimer again, because once again I'm going to be talking about live market information and giving my opinions on the market. So I think you need to be mindful of this disclaimer that we've got here, so please just read that very quickly, and if you don't get a chance to read it all, I will be showing it again at the end. So there it is. Once again, a little bit very quickly about me. Been in the city for 13 years, just trading with technical analysis and just being a market analyst through various brokers, trading with equities and Forex predominantly, and been doing that for 13 years now. So I've got my qualifications of STA diploma, which I got distinction in, and also I'm an MSCI, which is my investment management certificate as well. So a little bit about me there. Okay, so what's on the agenda for today? Well, as I said, support and resistance is the theme for today. It's basically the battle between the bulls and the bears, and ultimately who wins out that battle is the concept of support and resistance. Within that, we've got the key concept, I think, within this whole affair, which is that old support becomes new resistance, and that is a key concept that I think we need to try and understand whilst we're talking about this. Then I'm going to go on to just a look at how trading support and resistance, a couple of strategies you can possibly employ when you're using your training, and how you can use support and resistance to hopefully maximize profits out of your trading. A little bit of live market analysis, and we're looking at some of the key major Forex pairs, some of the key indices, and also gold, and also within that, if ever you've got any questions, please feel free to ask them. I will do my best to answer any questions as and when they arise. If I do unfortunately miss any questions, then please you can email us in and I will get back to you, and I'll do that personally. So that's if I do miss any questions, but I'm not expecting to. I hope not to anyway. Okay, so the start of support and resistance. What is support and resistance? Well, we basically see support as the build-up of demand at a certain price, and that is where the buyers come in to support and start to buying the security you're trading in. It's basically the price level at which demand is thought to be strong enough to prevent the price from falling any further. Now, as the price falls and goes towards support, it starts to get cheaper, and then subsequently, the cheaper something is, the buyers will then start to become more interested in it, and the sellers also become less inclined to sell at a lower price because they think they're getting less value for their profits. So the selling tends to dry up as well. So you sort of get to a level at which the support is the level at which the demand for buying exceeds the supply of sellers. And if you think about it in terms of simple economics, in terms of demand and supply, well, when demand starts to exceed supply in microeconomic theory, that is the point at which prices will rise. So, and that is exactly what happens in the stock market as well. So, if you look at resistance, it's basically the complete opposite. It's the build-up of overhead supply, which is the sellers, and that happens at a certain price, and it's basically the point at which the sellers are more inclined to sell or ultimately take profits on their security that they're trading in, and also the buyers are less inclined to buy. Now, those are two key concepts that sound the opposite, but are actually pretty much go hand in hand with the concept of support and resistance. So that is something also you need to get a grasp of. Now, gradually, the forces of supply and demand will become more aligned as the price moves, and the point at which the sellers outnumber the buyers is the point at which the buying pressure dries up and the price begins to fall and you hit resistance. So a little bit of theory for supply and for support and resistance there. Now, one of the key concepts that we need to talk about is where we breach support resistance. Actually, sorry, very quickly, these diagrams on this PowerPoint presentation just depict support there coming in at a low and resistance coming in at a high. And both support and resistance can be a single point, but more predominantly would be a multiple of tests of their levels to confirm the move. Okay, so the concept of breaching of support and resistance is probably the most important thing we need to think about, is because it basically denotes a change of expectations of the price that the market is seeing. If we look at it in terms of support, a breach of the support just indicates that there's a new willingness for the sellers or for the bears to sell, and also, as I said earlier, there's a new lack, also there's a lack of incentive for the buyers to come in, and basically, as I said, that's it's due to the changing of expectations. Say, for example, if you're trading equities and a company comes out and just makes an announcement that changes the expectations of the company, then that would ultimately mean you'll break through some specific price levels, and there's a change of expectations in the market generally. So that will generally tend to happen when you see a breach of support or resistance. Now, as I said, in terms of support, a breach of support is where the sellers have become reinvigorated. They've basically broken through on the downside, and there's been a renewed appetite to sell, possibly with a corporate profit warning or something like that, where there's new information and the market chooses to sell at a more at lower levels, and that drives the price down. Now, this could be due to an increased fear as a series of stop losses are also hit on long positions, and that is also something we'll be talking about later on, so we need to just shelve that for a bit. Increased desire for shorting opportunities, and also this could be where the buying pressure dries up, as I said, so where the sellers gain the ascendancy and the buying pressure just begins to abate. Now, this is an important concept, as is often the case where support level is tested on numerous occasions. So, as I said earlier, the number of times that a support level is tested, it gets hit, and then eventually the buying pressure just begins to go stale. The buyers just lose faith, and the sellers, the sellers start to win the battle, and the pressure pushes through the price. And as I said, the point at which the price meets an equilibrium is where you find the price flattening off, but that equilibrium is then broken, and there is a new expectation of downside, and the sellers start to win now the battle. So that's when you see a breach of support, and the price goes lower. For resistance, as I said earlier, it's pretty much the same thing, and what I can show you now is the concept of old support becoming new resistance and old support becoming new resistance and old resistance becoming new supports. Now, I can show you that on a diagram here. What we've got is this price bumps its head up against this resistance level, and then you've got a change of expectations here where the buying pressure outdoes the selling pressure, and you see a burst through the price at that resistance. Then you see a new move to the upside where it hits resistance, and then, as I said, you've got the concept of old resistance becoming new support. Now, this is a very important concept in the whole topic of support and resistance, because it basically is just the affirmation of the new level, the new barrier, and also is where you can start to think about your trading strategies. Because, say for example, if we thought about just a breach of support, say for example there was a whole lot of buying pressure coming in at 100, all those buyers that saw that came in at 100 then see the price falling through 100 and going down to 90. These are people that are still long at 100, so they're sitting on 10% loss at this stage, so they're getting a little bit concerned. They then see a little bit of support coming in at 90, and then the price starts to rally back towards 100. Now the psychology of that is what a lot of retail traders do actually fall into the trap of doing. Is basically where you see that you bought at 100, you've seen at 90, and you start to think, well, okay, price is coming back towards 100 again. I think I'm going to take that as a flat trade or a minimal loss and just come out. And that's the point at which the 100 level, having been the basis of support, now becomes the basis of resistance, because you've got the new, you've got that new tranche of sellers that had bought at 100 and are now willing to sell once again at 100 to come out as a flat. So you've got the new ceiling at 100. Now that is old support becoming new resistance, and on this diagram we've got here, we've got the opposite depiction of that, where old resistance becomes new support, where you break out and you come back to test. And the old sellers that were taking their profits or shorting up at this resistance level have been sitting on a loss, and then they come back and they can close out their short positions back for flat once more, and then you see the buying pressure come back in again, and that's old resistance becoming new support. Now, basically, we've got a potential trading strategy that we can employ when using this concept of old support becoming new resistance and old resistance becoming new support, is basically this one on the right here. But, say for example, once again, we've got this, I could depict that as use my example that I said earlier, 100. This is the 100 level, say 100 pence, and then you've seen a break of that 100p, you've seen a pullback there, and that then there is a confirmation of that new resistance, where the price starts to fall away again. As that price starts to fall away again, that's confirmed that new resistance being in place, and you start to see that once you're starting to fall away, you can then enter the trade. So what do? You as the fact that you've got this resistance in place, you want to put your stop loss above there to just give you a little bit of security, and because you've got that lower high in place as the resistance, and you can then start to trade short on the downside. And that is a potential shorting strategy you can have. What you need to do is you have your stop losses at, again, importantly, I think, as having a bit of room above this key lower high, and use that as a chance to put your stop loss in, so you put a bit of security in case you do get a pullback through that, or a spike that just breaches that resistance very quickly on the upside, before shorting again down towards the downside. I've got yeah, sorry, I've just got a question that's come in here. It's basically, it is Michael asking me, how do you use support resistances and which ones do you use? Okay, well, I'll cover that in a bit, because we've got a lot of charts I'm going to take you through now, but actually, let's start the charts. Okay, this is gold, and this is gold whereby you've got a lot of lines drawn in, horizontal lines, and they are depicting of support and resistance. Now, this is going back quite a long way, back into 2011 to 2013. You see these key lows that got hit throughout 2011 throughout 2011 and into 2012. In fact, you were trading pretty much in a very well-defined trading range throughout that time, and you broke. You didn't break these resistance levels, and you continually fell over around that 1800 mark. Then you came back towards that 1525, I think it is. Yeah, 1525 level, and found support. And it traded between those levels for almost 2 years. And this is where we find the first concept is basically where we got that the old resistance becoming new support and old support becoming new resistance. Allied to that, you see confirmation of the breach of support. What you want to do is you want to see a nice big move to the downside if you're breaching support, and that is what we saw here. You saw a confirmation breach at that level where there was a build-up of that selling pressure, and bang, the support is broken to the downside. Ideally, it would be on higher volume, but this is not always to be the case. But certainly, this is what we saw with gold, where we got this big, sharp move to the downside as there were changes of expectations on how the gold price was trading. Okay, so hold on, we've got a hand raised by Frederick. Okay, so thank you. Sorry, Frederick. Anyway, so what we're going to do is now just look at some other key levels. I've drawn in on this one here. You've got the old, as I said, we're looking for turning points, major turning points. You can, I suppose, draw a turning point at pretty much any trading day, at a high or a low throughout the trading day, but your chart will end up with a significant number of lines and support levels, and you don't really want to do that because your chart will end up being just a whole melee of lines, and it becomes almost impossible to really get a proper gauge of what you're looking at. So you need to, I think, take the support and resistance levels at the key points, the key turning points, and as I said, ideally with this whole breach on a strong candle. And what I've drawn in here is the key levels here. 1432 is where we saw a series of highs, and if you actually extrapolate that across all the way, you see that coming in again. You see that coming in again as the key level on the upside in that period there. Once we had this breakdown of this trading band here through the support at 1525, we then started to build new expectations of how the gold price is moving, and then you start to leave a series of peaks. But then within that, if I zoom in quickly, you start to then build new levels, and you've got here this series of peaks and troughs in the price, which makes up what I like to use. Personally, I like to use resistance and support and resistance bands rather than absolute levels, because one of the reasons why you do get the different or support levels not hitting to the pip is that obviously there's a lot of volatility in financial markets, but two, there's also the fact that different brokers give different prices on different platforms, and I think that is something that you need to just accept, is the fact that you will not get exact pricing on a lot of your charts, because there are other providers that also give pricing levels as well. So you need to just bear that in mind, and for that reason I like to use support ranges, and don't like to get too bogged down with absolute price levels for support and resistance, because it just doesn't really work like that in the real world, unfortunately. So on here, on this gold chart, we've got a series of highs that happened through there's a low there, and then you start to see the corresponding highs that come in through June and September, and then with these lows that we saw in April and May that nicely supported, you start to see that becoming new resistance. All these support lows, you saw that burst through to the downside in June, and then you saw that becoming resistance again. So you could then start to think about a shorting position up at that resistance level. You've seen a burst through the resistance to the upside, which effectively breaks the resistance, and then you see that resistance then becomes support. If I can just zoom in slightly closer here. Yes, so you've seen that burst in August 2010, burst through the resistance that had been built up, and then that resistance becomes new support, and it's once again you see a burst back below the resistance, below the support, sorry, and you start to build again, and that resistance line actually becomes a new turning point again throughout many of these periods here as well, through to March 2014. There's a little bit, you could argue, of an upside, a false upside break going on here, but then subsequently you start to turn lower again. And just zooming all the way forward, what we're looking at the moment here is a series of old lows, which were old supports coming in through here and making up this support band between 1267 and 1278, and you push that all the way through, and lo and behold, we still continue to see that coming as the key turning points. Old resistance, old support from new resistance here, then you burst through, and it becomes the level of support to the downside, support, 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 bang, downside. Now that's the position we're seeing ourselves in at the moment. This is gold at the moment as we speak, and we saw that sharp move to the downside. That was a big consolidation band that happened for about 3-4 weeks in gold. Then we saw a sharp move to the downside, breaking all that form of pivot level, and we now build that pivot level up again as the new resistance. That is old support becoming new resistance. So what I'm looking at now, live in the market, I'm just expecting this minor bounce that we're getting in gold to be a nice shorting opportunity. 1266 towards 1278, $12 worth of pivot resistance there, and I think that is ultimately going to prove to be a nice opportunity to sell on gold in the next few days, hopefully. And it is coming up quite nicely as we speak. Okay, so that's on the daily chart. You can also look at support resistance on an hourly chart. This is a little bit more zoomed in on our chart that we had earlier, and you'll see here this this is an ideal explanation of the concept of old support becoming new resistance. We see this, that was the breach, as I said earlier, that sharp move to the downside in late May, broke through that key support at 1268, in fact it was, and then started to build a new level, so new expectations. So you start to then form new support. You've got a support there at 1260, and then bang, you're through that support, and you become that support becomes your new resistance. Once again, you're hitting up against this new level of resistance around 1260. You found support at 1251.01 or 1251 around that point, and you found support, 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 and then bang, you're down again. You've gone, the support's being broken, and you find a new level where new old support becomes new resistance. So what gold then did, consolidation for about 3-4 days, sideways, 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 and then to the upside, bang, a breakout of the old resistance, and then starts to build new support. That was this period here was non-farm payrolls, and there was a bit of volatility trading around non-farm payrolls, but this sharp move to the upside was the ECB Thursday. But what we've seen since then is this nice support build around that 1251 mark, and that is building to the upside. You've also now broken above 1260, and you're starting to now use that 1260 mark as your level of support. So you start to now think, well, dips towards 1260 are a basis of support. You could also, I haven't drawn it in here, and I've just noticed that I probably should have done previously. Got this nice band of resistance there that is becoming new support as well. So around 1257 is your new level of support that you need to be looking at. So your support band on gold that I would be looking at, possibly if you're going to do a very short-term long position, because I think ultimately this is going to be a short up around that band between 1268 and 1278. You could be looking at putting a long position between this 1257 to 1260 mark, because you've got a nice band of support there that's building very nicely. So that's gold on an hourly chart. Does it work on a 5-minute chart? Zooming even closer. I mean, yes, it does. Although I think that it starts to become a little bit more spiky on the 5-minute chart. And to be honest, it's a little bit it's very short-termist if you're going to be trading gold on a 5-minute chart. It's not personally my chosen time frame, but still you can arguably say, as I said earlier, you've got this support that's built around that 1260 mark, 1259. So you start to think, as I said earlier, that is on a 5-minute basis. That's probably your key level that you need to be watching out for, 1259 to 1260. You probably wouldn't want to get below that on a 5-minute basis if you're going to trade very short term, because you may well come back down towards this 57 mark, which is I'll put a crosshair in 1256, 1257, which is your next level of support. Okay, so what are the different levels of support, or what are the different basis of support you can use? Well, you can use price, as I said, I've been talking about. You can also use trend lines. You can also use round numbers, moving averages, and Fibonacci levels as well. What I'll do quickly is just to show you on my screen here. This is cable. This is a very good depiction of many of those, actually. Okay, so you've got trend lines providing support. Trend lines providing support. Hold on one sec, sorry. Sorry, hold on, not speaking loudly enough. So I hope this is a bit better. Okay, okay, so on cable, we are at, we've got these trend lines, and we talked about trend lines last week, providing support and resistance, and this is an ideal one here. We've got the resistance of this old uptrend here. You've got the new resistance of this downtrend as well coming in. So that old uptrend, providing resistance here on this on the 6th of June. Also new resistance of this downtrend. We've also got support that is being found on moving averages, the 89-day moving average. Once, twice, 3 times. Is it going to be a 4th time that it finds support on the 89-day moving average? Looking intraday, I will show you what I've actually found today. Fibonacci retracements on cable hourly chart. Almost work perfectly. Look at that. We've got this 38.2%, although it's covered up by this green resistance band that I put in. 38.2% coming in at 67.70. Now that is pretty much bang on where that 67.70, excuse me, 67.78, which is 67.80 was that big resistance mark that had been used as the basis of support and resistance. I'll show you in a minute. Fibonacci again around the 61.8% grid level capped these highs as well on the upside. So you've seen that. Hold on, I have got a question, which will hopefully. Hold on. Let's just see the questions. Can you make the chart bigger? Okay, yes I can. Let's just zoom that out. Okay, there's your chart that's bigger. That's a bit clearer. So yeah, you've got these Fibonacci levels 61.8, which you can't see the numbers unfortunately. 50% and 38.2% are your big levels there. So if I just remove that, you can then see how you've got this support resistance on cable. On the hourly chart, this is a fantastic level. I like to see at 67.80, which provides support here, bang, you've got broken to the downside, sharp move to the downside, then becomes resistance, resistance, and then sharp move to the upside, becomes support, sharp move to the downside, and then we are now trading around that level, and I think that this is, personally on cable, I think this is an opportunity to short cable, because you're now into this resistance band, which these levels here at around 68 big figure had been the basis of support throughout many times on this chart, and I believe that now 68 big figure is also makes up a resistance band that I would be looking at to sell. I've also drawn in this trend line, which also I think is a resistance, and we should be looking at as well. So that is on cable. Okay, so let me just see very quickly. We've covered pretty much everything. Okay, so what I'm going to do now is look at a live concept of the market, which sorry, excuse me. Let's just get to drop the charts. I was using that one either. Okay, hold on, I just have a question. How would you time your entry properly? Lines, stop losses. Okay, well, yeah, as I said, on the presentation, which I'm going to quickly show you again, is this is where we would start to think about that. And if you sort of look at cable, for example, you've seen that break, say on cable that was 167.80, that level there. Seeing the breach of that level, and then pull back towards it, and you start to now trade on the short side. So, for example, here on 67.80, okay, so that is your level, 67.80, your support, and you've seen the breach on that because you've now had this key resistance. Key resistance that turned into support a couple of days back, and it's now turned back into resistance, and that's around about where you're trading. So this resistance band here, you start to think about your shorting opportunities within this trading band between 67.80 up to the 68 big figure, I think, and ultimately you start to think, well, okay, how would I then gauge my risk reward? Risk reward, in my opinion, on trading is probably around about 3 to 1. So you have three levels of trading in terms of profit. So the key low on cable comes in 66.91. So anything below $1.67, I think, is a decent take profit area. Because you do also have, to be honest, 67.20 seems to be a bit of a support level as well. If I show you on that seems to be a bit of has historically provided the basis also back here as well, 67.29, so not too far off there. So I reckon anything back below 67.20 I think you'd probably be happy with. So if we said if you're sort of shorting around this sort of level between 67.80 to 68 big figure, let's say you're shorting at the market, so 67.84. If you had a profit target of 67 big figure, that's 84 pips to the downside, so you'd be looking at what, 28, something like that, pips, between 28 and 30 odd, I would say, of pips for short for your stop loss. So you'd probably be putting it above, I would say above initially this high here at 68. That I just see there. See here that high there at 68.17. So if you put your stop, maybe give it a little bit more room, 35 pips, 36 pips, and you can stick it at 168.20, which gives you a bit of a room above that reaction high from the 10th of June, which is yesterday's high. So I would be that's how I'd be looking at it. In fact, I did actually put out a short today with pretty much that that basis of risk reward. Although I gave it a little bit wider, I think I put it at 68.35 this morning, because I do ultimately believe the cable is going to be coming back down towards $1.67. I see this progression of lower highs continuing to pull cable lower. Okay, so if we take a look now at the markets generally, we start with euro dollar. Okay, I'm going to keep these indicators on here. You don't necessarily have to look at them, or I'm not really going to focus on them too much because they're going to be, this is RSI here, you've got MACD lines and stochastics. They're my three momentum indicators that I like to use on a consistent basis. We'll be focusing on those in a future webinar, so if you don't follow them today, then don't fret too much, but I will be focusing on them in a few weeks. Okay, so hourly euro dollar. Okay, what are we looking at here? I've been drawing in these series of steps declines on euro dollar over the past few weeks, and if I change that quickly to daily, maybe see more. Okay, here we go. Right, daily euro dollar. Okay, the big factor that we need to be watching out for is this big double top pattern. That gives us a downside target of 33.75. The initial support that the initial breakdown of 36.70 becomes our new resistance. So that is the key concept to just take away from that chart there, is that 36.70 becomes the new resistance. And lo and behold, several occasions since that 36.70 mark was breached several days ago, a couple of weeks back, it's now become the basis of resistance. And over the course of 3 days, over the past week, it has been pretty much hit to a tick, actually. You had on the 5th of June, you had 36.69, and just a little bit above it, 77, and then again you had 68, and then bang, fell to the downside. This support subsequently at 35.85, 35.84, whatever, that had been provided as the floor. That was ECB, so that was the ECB move, so maybe discount that But anyway, that once again was the support, held, then bang to the downside. So that now becomes a new resistance. 35.85 is where you need to be thinking about as your new resistance for this chart on euro dollar. I still think that euro dollar is going to be moving lower. I think possibly, just very quickly, you've got a bit of possibility of a recovery going on with these momentum indicators, but I think it's probably just unwinding that oversold situation. I think 35.85 is a very key near-term resistance, and if you had a move back anywhere near towards that, I think that would be an ideal chance to sell on euro dollar. What we've had so far today is 35.57, which was today's high, and seems to have been the peak there. Strangely also, that was pretty much bang on where we saw a peak in the afternoon yesterday as well. So a couple of ranges there being hit, but I think ultimately we're going to see a test of that 35.02 mark, and also a test further downside as we go back on the daily chart. This key support here, 34.75, which 34.75, which is the new support and also a turning point, I think, within this chart here. If you look back historically, you'll see that has been used as the basis of support on numerous occasions. So that is your key level. I think we're coming back towards. Ultimately, I think 33.75 is certainly not without possibility, because that is the target from that downside top pattern we've got on euro. Okay, we've talked about cable, so I'm going to go quickly to dollar yen. This is dollar yen on the daily chart. I am a little bit up in the air about dollar yen at the moment. Having it's now actually broken within the last 2 minutes, in fact. So I'm now going to have to probably change my view. So let's just have a quick look. Okay, this is dollar yen over the past few months. We have been building a downtrend, which I think is still in place. It's now broken an uptrend, which had been building over the past few days, and that is now sharply been breached to the downside. You've also seen a sharp move below 102 big figure, which I will show you on the intraday chart. Is my big level. I've been watching 102 big figure for a while. I think that this is a key pivot level on this chart, going back a long way. Just time and time again, resistance becomes support, becomes resistance. It's just a very consistent turning point of dollar yen, and now we've seen a breach through to the downside. So that gives me a lot of concern, I think, on dollar yen. Not only that, we've broken this uptrend. We're in a new building phase from the downtrend as well. And also you've got your moving averages that are rolling over. You're trading underneath all the hourly moving averages. So I think the pressure is building now to the downside on dollar yen. So yeah, I think pressure is building to the downside. We've broken that key low at 102.10, which is here, and that I think is now going to start to. I think that just gives us an impression that dollar yen is under pressure to the downside, and that the yen is strengthening. Just as an addition to that, keep an eye on the Nikkei tonight. Usually when the yen strengthens, the Nikkei will fall. At tends to be the case. They are very well negatively correlated. Okay, so that's dollar yen. S&P 500. It's actually opened down. And yes. So I have been on the daily. This is you've now got, although probably shouldn't be talking about this quite yet. You've now got a sell signal on the RSI, and that is interesting because we had, I think it was 8 closing highs in a row higher on the S&P 500. Now that is getting into bought territory, certainly. RSI's at record levels. I think dating back to a year or so. I think it's June last year. I think. But we've had this sharp move to the upside now. I think you could be building for a correction. Now, what sort of a correction could we see? Well, go back on the daily on the hourly charts. Well, you've got these. If you start to think that, I suppose you've got the old resistance and new support around 1915, that's quite a long way down, but then you've also got a trading band up towards 1926. I mean, there is room for a correction, you would certainly argue, on the S&P 500. It's been going one way for so long that markets don't tend to do that for too long before seeing some sort of a correction, and you may well see the S&P 500 is going to be now pulling back towards this 1920 to 1930 sort of area, because, as I said, it needs to unwind some of this overbought momentum. So just coming off the top there, you could almost even arguably draw an intraday top pattern. Head and shoulders pattern. Again, head and shoulders is one thing that I'll be covering in a couple of sessions. I'll cover the multiple day chart patterns, multiple period chart patterns, but that is what we might be seeing at the moment, a bit of correction in the S&P 500. Now, the DAX, which I know a lot of you watch. Yeah, we've got this uptrend on DAX, which I very much like. We've been in that uptrend since April, hitting on numerous occasions to the upside. And it's not a million miles away from that now. It's sort of that support that comes in at 98.67 is probably the key near-term low. It certainly is key near-term low, but I think that you've also then that one you've got the this big uptrend that comes in provides waste of support as well. Furthermore, so you could argue that this moving average, which is the 200-hour moving average, may well also come in as being active as support as well. But yes, I think this is a fairly healthy correction, I think, in the DAX at the moment. And anything back towards 9,900, I think there is a decent area of support there that we could start to think about long positions. The key support, I suppose, starts when you start to come in at 98.10, which was an old all-time high that subsequently got burst through to the upside. So you'd certainly say that is now your key support, 98.10. But I suppose that is still 130 points away to the downside. So it's around about 1.5%. So I mean, that's not a correction that isn't possible, but certainly I think the initial level around that 98.67 mark with that uptrend is an interesting chart factor that we need to look at. Okay, so for FTSE, FTSE 100. It has been so disappointing, FTSE 100. I am still of the belief that, I mean, I put it in my morning report today, I did talk about the FTSE 100 and the fact that it could be not, it's actually set up on the daily chart, fairly positively, and it actually is. It's just that it can't find the impetus to the upside. You've got all this key support that comes in, that's been used time and time again, but you're just failing to really make that move to the upside. You would even still argue that this bearish key one-day reversal that we saw at that at that 14-year high, still is a dominant chart feature on this daily chart on FTSE. And it's basically been trading sideways for around about a month now, between that 67.80 to 68.80 sort of level. So around about 100 points is a very much a neutral sideways move. But these momentum indicators, fairly bullish configuration, you'd argue, but still it's just disappointing. And I thought yesterday that we had what is called a gravestone doji, where it's a candlestick pattern. These are candlesticks. It's a candlestick pattern that they open and close at the same point at the high of the day. And you basically see you can move to the downside and then see the buying pressure pull back in and positively trading up at the high again. But you've seen that pretty much wiped out by today's trading. So very disappointing day today, I think, on the FTSE, and just shows, I think, that the lack of desire to break FTSE to the upside, which we're seeing at the moment. Trading strategy on FTSE, to be honest, is a difficult one, because you are in this sideways range, so maybe buying towards the side, towards the bottom of the range. 6,800 seems to be a fairly decent level. You've got a support 67, which I suppose you'd use as a low, because that would be acting as a 1 month low. But yeah, FTSE's it's just a lack of desire, I think, to really pull the FTSE higher. There's not much going on there. I mean, that's come as all these indices like the S&P, the DAX, have all broken to the upside, and the FTSE has not, and that really gives me a lot to be concerned about. Okay, so we've looked at gold already as a trading strategy, and this is more on a longer term play. So we've still got these key levels. This is on the daily chart again. We've still got these key levels between 1268 and 1276, 77, and that I said earlier, I think is my selling zone that I'm going to be looking for. Yeah, so near term you could arguably be buying dips now towards that 1257 mark, but I think in the medium term, I think this is a nice sell zone between 1268 and 1278. Okay, very quickly, why not? I will look at silver, because I know a few do look at silver. So it is an interesting chart, and an interesting chart predominantly because I will show you here, not that, I'll show you this big support that we had on silver at 1880. And that was throughout November, December, late Jan into April, May, and that got breached to the downside. And I think that breach is now going to suggest that this rally is a selling opportunity. If you zoom in on here, you're back into, I think, a nice downtrend. Oh. We're pretty much there, actually. I think on that downtrend where you are today. So you'd now start to think, well, you're being flanked also by this 55-day moving average over the past few highs. that comes in at 1942. So this move to the upside, encountering the resistance also from these old support lows around that 1920 mark, which seems to have held back support. We never really got a decisive breach, but then support, and then I think it is now becoming a resistance on this chart. 1920 on silver is something we need to look at. So one of the key concepts of technical analysis as a broad subject is the multiple indicators. Never really trade on one indicator. Trade on when there's a multiple confirmation of indicators. And what we've got here, we've got this downtrend on silver. You've also got this 55-day moving average providing basic resistance. You've got this resistance that comes in around 1920, so it's a nice band of resistance here. You've also got this broken, the breach of that support at 1880, I think, just shows that ultimately there will be further downside. If you go into momentum indicators, you're also up to 50 on the RSI, which is pretty much where the index, the RSI falls over. MACD lines or negative configuration. So that would give me quite a lot of conviction to say that if you now get a sell signal on silver, I would be going and selling short. Okay, so that's a run through the markets and also obviously look at support and resistance. Just enough time now to basically say thank you very much for listening today. The next webinar in our series is on Wednesday the 26th of June, and that is on trading with single period patterns, and that is a very interesting webinar, I believe. I would urge you to try and read the handouts that we give and we provide on the website. They will help you to to act as a guide through these webinars that we're going to be holding. So I would urge you to read them or try and read them. That's something, as I said, that's on the website. In terms of following us on Twitter, my handle is @HantechRich, which I'd be more than happy to chat with you on Twitter if that is the case. And if you have any questions, and if I haven't covered anything that you find interesting today, then give me a shout on, and we'll try and I'll get back to you. And our email address is marketing@hantechfx.com, and I hope to hear from you if you have any questions. So once again, that is my risk warning for the disclaimer. As I said, live information for the market, so you probably need to be reading that disclaimer, and that is the last thing I will leave you with. So if you enjoyed this webinar, then hopefully you will be able to join me in a couple of weeks' time. Then I wish you good luck with your trading, and I will speak to you soon. Thank you.